Alright guys, welcome to my fourth video. Today I'll be presenting you the fintech slash neobank company Nubank from Brazil. It's now the biggest fintech pretty much outside of Asia and in Latin America. It's a pretty amazing company. I think it's sometimes misunderstood by some people saying um, like, oh, the ROEs are so low, why is it better than the legacy Brazilian banks? But today I'm gonna walk you through the latest earnings and also give you some information that is not stated inside that I have gathered by doing some research. So let's get right into it. So what made Nubank is pretty much this here. Their Visa, Yellow, debit, and later also credit card. That's how they gonna got started. So Nubank was founded in 2013 by a Colombian man named David Velez, along with the Brazilian Cristina Junqueira and also the American Eder Ribble. It's actually quite a good team. If you look into their background, David Velez, he's used to be banker, engineer, and in general, he's an entrepreneur. He's still the CEO of the company, so it's also good. CEO, founder-led company. He has Stanford education, studied engineering, and Christina, she studied mechanical industrial engineering, and also she worked for several Brazilian banks and also Boston Consulting Group. And Edward Whipple, he's the CEO, the CTO, Chief Technology Officer of the company. He studied software engineering and computer science at Princeton University. So very capable management. Nubank, they were first founded by Sequoia Capital and also Kajik Ventures and Nicholas Bekuren. So that's especially Sequoia Capital. Some of you might have heard of them. They have founded a lot of fintechs or any kind of software startups. Also, Tencent bought a stake into them in 2018 for worth 180 million. So you can see they have some quite big backers in history. That's how they got started, how they got their first capital, let's say. And they're a digital bank, so they have no branches. Their main competitors, Itaú, Unibanco de Brasil, and also Itaú and Banco de Brasil. Those are their two biggest competitors. And maybe some history right here. So in the 1980s, that's when the Brazilian, let's say, biggest industrial policy started. And of course, to let's say finance those factories, Brazil needed some kind of let's say centralized funding agencies, and that's kind of how Itaú and Banco de Brazil started. Well, Unibanco used also be one of them, but that was a big merger. I think the second biggest merger in banking in Brazil. So Itaú Unibanco was now one bank, but before that was three of the biggest banks. They do a lot of real estate financing, industrial financing, any kind of financing you can imagine, be it in industrial and energy or production, industrial production whatsoever. So in the past, they haven't really cared about their consumers. Well, of course, they have consumer banking. They have a lot of branches. They have a lot of ATMs. But actually, the inefficiency of those banks, Itaú and Banco de Brasil, it's kind of what made David Veyes make Nubank. He's a Colombian and he moved to Brazil and wanted to open a bank account in Brazil. And he kind of have had a very let's say bad experience trying to do so because you can see he has had to keep his bag in a locker, even the revolving door locked, trapping him at the entrance to the branch. When he needed a manager, he was kept waiting for a long time, and the document requirements were very bureaucratic because he was a foreigner, and he needed multiple weeks. Like he would call there, beep beep beep. Oh yes, Mr. Ellis, here's your yes, here's your number. Just wait a few days, then call the other woman at the other branch, give her her number, then you wait a few days, give her the number, and so on and so forth. You kind of know, maybe, I don't know how it is in, let's say, a country like America, which is maybe more service customer focused. But I can tell you, in some European countries, it's really, really catastrophic for consumer to open a bank account at some of the typical branches you see around Europe. So he was very frustrated with it, and he thought to himself, how do I make such a fundamentally different experience that I can attract customers to a branchless banking model and grow this also to be a profitable business? So that's when David, Christina, and Edward, they got together and started doing this. Founded Nubank, got this product trying to beat out the old like Itaú and also the Banco de Brazil, which were more focused on those like industrial real estate and whatsoever interest earning opportunities, let's say, by giving them loans. So that's how they got started. Remember the really awful banking experience in Brazil. So now let's dig in a little bit into the numbers of Nubank. Continued growth of one of the world's largest digital banking platforms. So as of now, they have over 100 million customers. 100 million. It's the first fintech outside of Asia to have reached 100 million. Here you can see 100 million, May 2024. They have pretty much, I mean, at the beginning they had some troubles, but after it's like typical exponential growth. They have also launched in Mexico. Mexico is growing fast right now. They have recently launched in Colombia. Still, it's growing fast, but still the numbers, absolute numbers, are not as big. But Mexico is really getting traction. And what is really insane is they have 54% of adult population in Brazil using Nubank. You'd think like awesome. So like you know those SoFis and Ally Financial and stuff, but they don't have 50% of adult population in the US using their products. How did they achieve this? So they kind of had a very, very good, very lucky starting point, I would say, because in 2013, when Nubank was founded, by that point, I think 70 to 80% of Brazilian population, they had, I'm sorry, it's way more, 80 to 90%, they already had access to smartphones. And they did very good marketing, which spoke to the millennial population, which was also upset, like David, with the banking processes and consumer banking process in Brazil. And they actually managed to attract customers very easily, very efficiently, because their experience was just better than your typical Itaús and your typical Banco de Brazils. They have a 83% monthly activity rate, so very active customers. Of course, depending how they define activity, but they define it by, of course, using their products, transferring money, using the card, so on and so forth. So it's not like zombie activity. Revenues, FX adjusted, so foreign currency, because of course in Mexico you have the peso, in Brazil you have the Brazilian real, so it's dollar adjusted. Its revenues are up 64% year over year. Gross profits 76% year over year. Profit margins 43%. They're standing at 43% margin. That's also insane. I'll tell you later how can they achieve this fast growth and also these high margins, which are kind of typical for a bank. They have an annualized ROE of 23% and adjusted annualized ROE of 27%. This comes from the fact that Nubank has a lot of deposits because they're growing so fast. They have a lot of customer deposits, which let's say they can't put to very how do you say, risk adjusted use. So if you adjust for those, let's say, fast growing company high deposits, then it's actually 27 instead of 23% ROE. So they try to be very conservative in their loan underwriting. That's why their ROE is a bit lower and their deposits are a bit high, more than your typical bank. In comparison, Itaú has on average the last 5 years 16.74 ROE, and Banco do Brasil 15.33. But that's not really realistic because in their latest earnings, Banco do Brasil has reached an ROE of around 20%. If I can't find it. It's not that important either way. It was around 20% here. You can see here ROE 21%. This comes from the fact that their 5-year average ROE was of course low because look at this interest rate. So 2015, their interest rate 2016 was around 14.2%, 25%. So the Brazil central bank interest rate. And it's gone down continuously until COVID, inflation, so on and so forth. Now it's gone back up. So their ROE is higher than the 5-year average and even higher than the current ROE. So 27% adjusted ROE to their best first quarter in history, 21.7%. So that's some numbers you can sleep on, I guess. Can think about when in your dreams. Um, Customers, month over month, 1.7x. They have 1.7x their customers in 2 years. CAGR of 29%, continuous annual compound annual growth rate 29%, 75% CAGR revenues FX adjusted, gross profits almost 4x, right? So their growth is insane, just going up. You can't really see a flattening happening. And also their net income. So they've been profitable since Q3, and you can see their net income is really growing fast from $7.8 million in Q3 2022 to $378 million. Here we can see their gross profit margins again, their ROEs growing steadily. Adjusted ROE, of course, a little bit higher, as I said, adjusting those high customer deposits, because when you grow this fast, you tend to have a lot of deposits, and if you're really not careful with how you put those deposits to use, for example, look at Silicon Valley Bank. That's kind of why they went bankrupt. They also had a lot of growing deposits, and they really didn't think about that much about risk management, and they invested a lot into long dated government bonds, which had very low interest rates. And when the time came and a customer tried to withdraw their deposits, they had to sell those bonds at a very high loss, because that was also the period when the government hiked the interest rates and those bonds were not yielding 1.5 but 5% at some point. So of course they had to take a very big loss in that, 25%. All right, major milestones. So as I was saying, in Mexico they've been open for a few years now, and when you actually comparison of Brazil and Mexico 19 quarters after launch, okay, so Brazil 2018, Mexico to 2024, the market share of customers 5.1 to 3%. So already way higher, almost double. Market share of credit card customers 2.5 to 2 compared to 2.3%. This metric is a bit worse, but still better than after 19 quarters. Active accounts 2.4% compared to 0.5 in Brazil. Credit card purchase volume 6.1% to 4.3% of the whole market in Mexico, right? Deposits 1.2% of deposits in Mexico compared to 0.5 in Brazil after 19 quarters. Interest earning portfolio 2% market share after 19 quarters, that is. Remember, just 19 quarters, that's a very short time frame compared to 1.1% in Brazil. And the revenues, higher revenues. So this is Nubank's growth formula, hidden formula, you could say. So their formula is they want to grow their customer base very fast, as you've seen in the charts before. They want to increase their revenue per customer, so giving them products. For example, they have products in wealth management, so be it stocks or equities in any kind of form, crypto, Bitcoin, Ethereum, whatsoever. Also, they offer insurance policies and in general any kind of interest earning products, be it some kind of bond ETFs or in general high yield saving accounts, fixed savings, everything you can imagine what the typical normal bank offers. And I think this is very important part, the low cost operating platform. By being an online bank, they're able to have very low operating costs. And you might think, yeah, but an online bank, maybe I need someone to, so I want to have the safety. I want to go to a branch and see someone, see a person face to face. Well, Nubank has made a kind of experience in which especially the younger folks, millennials, as I said, are mostly people who use this, who are a bit like tech. They have a center affinity to tech. They're using apps. They're using their smartphones. They're actually feeling very accustomed to this platform, to the Nubank platform. So they're really not bothered by the branch because the experience is just not better. It's fundamentally different. If you lose your credit card, for example, and you're a Itaú or Banco de Brazil client, you have to call somewhere. They'll give you a code. Then you'd have to wait. Then you wait in the call line. Then you you put on the wait with another agent. You give them the code. They're like, oh yeah, that's I don't know how to do that. That's my colleague's problem. And then they moving on to another colleague, then the colleague is mad because he's got to catch his flight at 12 p.m., whatever, blah, blah, blah. Well, with Nubank, you go into your app, you lock your credit card, and then you get a message from a customer agent. He writes you, hey, are you okay? I seen you block your credit card. Do you want us to send a new one? That's the kind of service you can expect with Nubank, all within maximum half an hour, right? You don't have to call anywhere. You'll get an instant message. You'll have a person behind that message. They're very well trained. They know what to do. They have a standard protocol on how to serve customers in certain situations. Like when you lose your credit card and they see you lock it, there's already a flag in the system and you'll get automatic help with it. You don't need to call anyone or do anything. You can just message them. Interesting metric is Nubank has one customer agent per 8,000 clients, while your typical bank has one agent per 200 clients. That's how they can achieve very low efficiency ratios, which you'll see later, and also this low cost operating platform, and also why they can offer high deposit savings in comparison to other banks because they can save on cost, while other banks cannot because they have branches, they have ATMs, while Nubank doesn't. They have some people working maybe from home in, let's say, Sao Paulo, in wherever in South America, serving one person serving 8,000 customers. That's where this formula comes from, and everything put together equals substantial earnings power. All right, here you can see again growing customers, activity rate. It's been growing year over year from 82.1% to 83.2%. And yeah, the customers now having reached over 100 million. This is a very interesting graph. I was kind of confused when I first saw it, but it's actually kind of easy to understand if you look at it for a little bit. It's kind of self-explanatory. So active customers. What you can see from this, the main takeaway is the more time a client spends being a new bank client, right? The more active they will be, the more products they will use, and the more revenue they will make for Nubank. So the longer they're a Nubank, the longer they're like intrigued. They want to see what products they have. They see, oh damn, that's actually a good product. I want to use that. And of course, if they already see, okay, so my Visa debit card is really good. I like can use it anywhere. It's cool. It's purple. I like it. And then all of a sudden they get a message from some kind of insurance policy or for some high yield saving account, or even sometimes what Nubank does, they even move customers' clients into high yield savings accounts so they can earn interest on their money. And all of a sudden the client logs in and oh, I've got 100 real on my money laying around. Oh, that's so cool. They think, oh damn, Nubank is a really good bank. It has really cool products. So they'll keep getting more and more products and also getting us shareholders more revenue. So average revenue per acquired customer, they call it RPAC, quite important metric for Nubank. $11.4 per month, but the more mature cohorts average $27 per month. So you can expect as Nubank grows and mature, it's still very fast growing, like kind of almost it's I mean right now it's 11 years old, but still growing very fast. As it grows, you can expect more and more revenue per customer. And as long as the growth of the customers continues, you can expect this just go up and up and up. But you never know. But still, right now it's looking like it. So average revenue per acquired customer is this at 11.4 right now. For customers who have been longer at the bank, it's around 27. And the revenues, 2.7 billion, $2.7 billion. So year over year, 64% gain, RPAC 30% gain, FX adjusted, of course. As I said, they deal a lot with foreign currency, so it's makes it easy for us if it's US dollar adjusted. But of course, FX risk. Never forget foreign currency exchange risk. All right. So purchase volume growth remains strong. Purchase volume growth. What do they mean by that? They mean how much money does our client spend with their card, which we can see the more mature the client is, what this graphic tells us, the more they tend to use the Nubank cards, be it a prepaid card or credit card. And as time goes on, the cards keep growing almost equally year over year. But in general, people tend to use Nubank for their credit card function, which is good because if people have credit, then you'll get interest as a bank, which of course you always want to get interest. The more, the better. But risk-adjusted interest, let's say. So as time passes, people use more products, they make more revenue, and they pay more often with their card, which of course Nubank gets fees, and as well as Visa and MasterCard. Some of you are probably Visa MasterCard shareholders. You also earn money from this because Nubank usually has Visa cards, so yeah, you get fees from them as well. But the bank also gets fees. I'm sorry. All right. Strong performance for both credit card and personal loan portfolios. Personal loans, credit cards. So what can we see here? Most of their loan portfolio consists of credit card debt and some of it from personal loans. They've been trying to build up their personal loan business. So it's grown 88% year over year, amazing growth. But of course, the absolute total number is a bit smaller from $2.3 billion to 4.5. And the credit card loan portfolio has grown from 10.5 to $15.1 billion, so 42% FX adjusted year over year. And as we see the personal loan portfolio grow, of course, the percentage of credit card loan portfolio is getting smaller. But that's good. That means they have a more diversified income stream from their loan portfolio. So their credit card interest earning portfolio evolution, also total percent of total receivables only in Brazil this time because Mexico and Colombia, of course, they're still growing very fast. So they haven't quantified that into the earnings presentation yet. So compared to the Brazilian market, as we see, the revolving balance and also the interest earning installments, they're way bigger than the market. So that means their portion of non-interest earning balance is way smaller compared to other banks. So the amount of money Nubank is earning interest on is way higher as a percentage compared to the market to other banks like Unibanco and Banco de Brazil. Sequential acceleration of secured and unsecured loan origination. So what they want to show with this is they want to show you that they're also not only into consumer banking, they're also starting to get into secured personal loans. Well, it's also consumer banking. What I'm trying to say is they're, sorry, that was a mistake. They're differentiating their consumer loan origination. So some of the personal loan portfolio is secured, it's growing. They want to grow that out. And it's those FGTS and INSS deductible loan. It's, for example, it can come from social payments, social security payments in Brazil, but also from pension payments or any kind of, let's say, secured payments, usually from any kind of state income. So they kind of found a product to for people with secured income to be able to take a loan. I don't know, it's kind of devil stuff, but still, it's earning them interest, and it's of course kind of a safer way to earn interest on loans than those unsecured personal loan. Even though there's a person there working a job or having some kind of income stream, but of course this is more secure. Robust deposit franchise driven by sustainable volume growth and stable cost of deposits. So how do we interpret this? So deposits in Brazil, they're growing. Here you can see the deposits in Mexico. And the cost of deposits is a percent of interbank rate. That means how much of the interbank rate does a new bank have to pay to their customers for them to deposit their money at Nubank? So 84% of the interbank rate they have to give to the customers. The interbank rate, I think, right now is around in 2020, mid of 2023, used to be around 16%. So 84% of those 16% of interest earnings they have to give to their customers for them to really be incentivized to deposit money with Nubank. And yeah, they can do that because even though other banks they have a lower cost, Nubank can leverage their non branch model, their neobank slash, well, they're not really neobank. They're for me, they're real bank. They're just in digital form. They can leverage that low cost of operation of operating their no branch model and give the customer a higher percentage of the interbank rate. And oh yeah, this I forgot to mention this historical seasonality. So when moving from Q4 to Q1, in Q1, a lot of metrics tend to trend down because moving from like Christmas to holidays, people spend less money or um, they have they tend to spend their savings. So in general, there's a seasonality there moving from Q4 to Q1. Net interest income and net interest margin. This net interest income is kind of self-explanatory, but the net interest margin is a very important metric in banking. So simply put, net interest margin is what Nubank is earning on the difference that it gives you on interest on your savings. For example, I put my money in Nubank, I get 10% savings, right? 10% savings yield. But they can loan out that money on personal non-secured loans or secure loans with, let's say, 20% interest, right? And if you compare those numbers, then you get your net interest margin, which they would be getting 10%, right? Net interest margin. If I get 10 from them and they give out my money with 20, right? But they're earning right now an net interest margin of 19.5%. It's been growing quarter over quarter. Here, as I said, the seasonality in Q4, right? From Q1, Q4 always goes down a little bit. But you can see they've managed, even though they're growing so fast, they have managed to grow out their net interest margin, which is really, really amazing. Because usually, as the banks grow to acquire clients, they need to give them more interest for their deposits, which Nubank does. But because they have such a low operating cost, they can afford to do that, but at the same time, while maintaining those high net interest margin and also growing them even at the same time. Very important metric here comes next. Cost to serve per active customer. Nubank, even though they've been growing so fast, year over year, 70, 80, 90%, right? They've managed to keep their cost to serve per customer, per active customer, very low. 9 cent, 90 cent to serve one customer, but their average revenue per customer is $11. And with their more mature clients, it's even $27. So as a customer is staying at Nubank, is making more revenue for the bank, but the cost to serve them is pretty much staying the same and barely going up year over year, right? So they manage, even though they're going so fast, they not grow their costs. If a company is usually growing, especially in the industrial sector, right, they need way more cost to manage, let's say, a mine, a production facility, whatsoever. Their cost will usually go up, depending also on the investment cycle and what kind of cycle it is. You can look at like lithium companies or any kind of chemical companies. Their cost to serve really, to cost of production in that case, really tends to go up and down, but here just stays the same, which is beautiful metric. Gross profit, yes, gross profit, of course, going up with the revenue per customer going up and the cost to serve staying the same, also net interest margin going up. And of course, the absolute number of gross profit is going up as well. Gross profit margin, very high and very nice to see here. But of course, the seasonality, they kind of forgot that. It's Q1, Q4 seasonality goes down a little bit. Strong track record of driving operating leverage as business scales. The most important thing here, of course, costs and net interest income. Efficiency ratio. So the efficiency ratio is a percentage which tells you how much of the revenue is used to serve a customer. As Nubank has grown, because so here they had their systems put in place, right? So there weren't many clients, but the system was put in place. Their IT systems, their servers, their agents, so on and so forth. 91.6% of revenue went to serving the customers. But because the system is so easy to leverage, the agents and the system to serve the customer stayed the same, but the amount of customers grew exponentially, as you saw. So that means if you don't have to invest in your system and you keep the same quality of serving a customer, you have the same ability, your system doesn't go down, it has 24/7 uptime, you have instant transfer, which by the way Nubank has, and you keep your customers happy, but you don't really need to invest in your assets, then your efficiency ratio goes down exponentially as well with the customer absolute number. So this is also really good efficiency ratio. As comparison, a typical bank in America has about 50% efficiency ratio. So multitude higher, which is what Nubank used to have around 2 years ago. Also very important, cost to acquire, $7 per customer, which only $2 is paid in marketing. Interesting fact, which is not mentioned here. Nubank still gains most of their customers from word of mouth. That's why their cost to acquire customer is very low. You can look at those industry averages. They're way lower, even in Brazil. In America, they're way higher. So they're very low compared to industry averages. $7 per customer. Usually word of mouth and also a lot of referral, like you get some type of bonus or any kind of special offer if you successfully refer a customer. Cost to serve, as I said, under $1, 90 cents, which is 85% lower than incumbents. Cost of risk, 6.3% consumer finance delinquency rate. That means only 6.3% of their consumer loan products or consumer loans go bad. That is 10% lower than the Brazilian industry. So their loan underwriting is very efficient, has grown very well. Especially, it's probably going to get even better as they gain more data from increasing customer count. And cost of funding, 84% interbank rate. Right now, they have 24.3 billion deposits, which are growing very fast. So not really a great liquidity risk here, as their deposits are growing very fast. Net income margin, 14%. Net income, as we said, growing very fast. We can skip over this as we've already talked about this. All right, this is also again an interesting slide. So in general in banking, maybe some of you watching this video, they don't know that much about banking. I've also had to learn a lot myself. NPLs is the non-performing loans. A non-performing loan is a loan which is not being paid off by the Christie, you could say, the person who's loan money from the bank. So you can kind of see a seasonality spike again here, as I said, seasonality. 4.125% of their consumer credit portfolio was non-performing, 15 to 90 days. So that means 5% of their consumer credit portfolio hasn't been paid off in the last 15 to 90 days. So 5% of it. And 6.3% is at 90 plus days. These rates are around 15% higher than market averages. So like Banco de Brazil and Itaú. You can expect that because Itaú and Unibanco, they also have different type of branches, right? So they have like different type of loans, like commercial or real estate or industrial loans, which usually don't go bad that often. So of course, a consumer, if he loses his job, he can pay off that his loan very well, or maybe he has some kind of income, like owning a business, which the income can also vary from month to month. That's why the non-performing loans are higher. And also, different thing, which might be a big factor, Nubank doesn't sell their non-performing loans. So a bank can sell off their loans. They don't have to sell their non-performing loans. Some banks even sell their good loans because they can gain a big premium on that when, for example, any kind of bond rates they're low and they can sell off a very safe loan with good interest on it. But usually safe loans they don't have that good interest on it. But anyways, banks do that. They sell their loans around, and Nubank doesn't sell them. That's why also I think their metric is a bit worse. But good news is, oh, I said like before, they're usually 15% higher than industry average, their non-performing loan portfolio. As a whole, their non-performing loans amount percentage have gone down. As their underwriting gets better, they gain more customers, gain more data, and they see some kind of patterns. As well as the customers, they use their cards more of Nubank, so they can see what they're paying, their kind of habits, paying habits, financial habits, their savings, so on and so forth. So the underwriting gets better. That's why the non-performing loans, of course, they're going down. Credit loss allowance. So the CLA, it's absolute number, which tells you how much money Nubank is putting aside when underwriting a new loan in case that loan goes bad, depending on the risk. So let's say they have a younger client who they see that he doesn't have a fixed income every month. They're going to have to write off, if he takes a loan, they're going to have to allow a bigger uh, loss allowance, big credit loss allowance for that customer instead of a customer who has a very high fixed income, has a house, has some savings, right? They're not gonna put a lot of money aside for his loss allowance. But in general, it's been growing because they've been growing very fast, as I said, in Mexico, Colombia, Brazil, and of course they need to put money aside if there is some kind of loss there, especially in the consumer market, because it's a lot of unsecured loan. Yeah, so moving on, we can also see the numbers again. Their different product customers, the insurance policy, unsecured personal loans, credit card customers, everything, investment customers, Pixel Boleto financing. You can look at those products on their website. It's everything's growing very fast. Maybe another interesting point about Nubank, you can see that compared to other banks in their geography, they have a lot of excess capital. So 1.7 times excess capital compared to their to banks like Itaú and also Banco do Brasil. So a lot of their liquidity position is earning interest. Is of course your bank should, as a shareholder for bank, you wish your bank to get a lot of interest for you. Um, how does this come? Well, of course, they're a fintech. They used to have at the beginning different type of capital requirements, but actually the Central Bank of Brazil had very good regulatory had a very nice regulatory pathway for Nubank. They even without those some kind of regulations, they wouldn't even be able to be here today where they are because Central Bank of Brazil they even paved the way for Nubank to be able to open digital banking accounts for their customers. Before it wasn't very easy because the Central Bank of the Brazil at the beginning they weren't very happy with those monopolies of Itaú and Banco do Brazil. So they kind of paved the way for Nubank to be able to open bank accounts digitally. And I kind of got off point. In Brazil, when somebody pays something with their credit card, the bank has 30 days time to pay the merchant. So I buy a pair of shoes with my Nubank card. I pay the merchant. I scan the card, but the bank actually has 30 days time to give that money to the merchant. While in America, it is 3 days. So the money's laying around, and Nubank can earn interest on that. For example, on the interbank rate, and also a deposit as deposits grow, depending on the capital, like tier one capital requirements, is kind of like a ratio which banks have to maintain in capital in case there is some kind of big credit loss or let's say customers want to withdraw their deposits. Um, with this excess capital Nubank has from the beforehand mentioned reasons, they can, for example, buy long dated bonds, which right now is actually kind of smart because the interest rate is high. So it's not bad to buy interest rate right now to buy long dated bonds right now compared to 2% what it was in 2020. Right now it's 10.5%, right? So it's also kind of a lucky time for Nubank to have this many deposits. Here you can see their non-performing loans again in Brazil, right? Their coverage ratio. So they can cover over 230% of their non-performing 90 days plus ratio. And in total, even the total credit balance, credit portfolio, they can cover 14.4%. So here you can see this capital gives us shareholders actually a very good, very safe, a big safety net in case those loans, those non-performing loans of 90 days tend to go bad. And the coverage ratio has been going up substantially, which is very good because they're growing very fast. And you might be worried as a shareholder if their underwriting is really that clean, but we can see they're very conservative and really thoughtful about their capital and their underwriting. Here you can see again the adjusted purchase volume, the RPAC, right? Here their different loan portfolio growing. Here again, deposits going up. So pretty much everything about Nubank is really going their way, and they're really beating everything. They're not only beating the legacy banks, they're also beating the fintechs, and they haven't even really gotten into those, as I said, real estate loans, maybe commercial real estate or even industrial loans. So they're only focused on consumer finance, and they haven't gotten into the war with direct war, let's say, with the Itaús and the Banco do Brazil and Banco Norte or anything like that, the Mexican bank, right? So it's interesting. I really like this company. I see a lot of long-term potential for it, even though the pricing, it's very high, 44.43 PE, trailing 12 months, right? 55.75 billion market cap. Here the ROE is kind of wrong as the SSCF 5-year average, right? They've been growing so fast. The ROE is still negative, but right now it's adjusted 27%. Yeah, so very interesting company. If you can get it at the right price, it's even more interesting. But probably even at this price, if they can keep growing this fast, it's probably still a good deal. So I hope you could have gotten some value from me. Maybe you heard some things you haven't heard before about Nubank, and have a good one.